everyone, and welcome to J Sanderson TV, our third episode for 2021, as the signs of recovery are felt all around Australia. Roy Sanderson is with me. Roy, things are starting to look up. We're going to talk about consumer confidence, but a sneak peek, things are looking up around the country in the economy.
Yes, Dave, great to be back again. Episode 3. We've got some great guest speakers today. Josh Frydenberg, the Treasurer. Here's an apology, unfortunately, but we'll keep pestering. We know you're watching, Josh, so we'll keep inviting you.
And some other great guests. There are some great guests on the show today. We've got Terrie Seymour from People and Culture Solutions and also Ashley Badcock from Hulson. So some really interesting conversations that we're going to have with some of our guests today, Roy. I mentioned consumer confidence. We're going to talk about that later. The economy in good shape. Carlton Footy Club, not so good.
Oh, we shouldn't talk football. I think your people at the Bombers aren't doing as well either.
No.
Unless you're buried for Melbourne or Bulldogs.
So we'll keep it to finance, tax and the economy today, and we'll start with our news headlines. And the big headline that's come out of the last month, Roy, is property. Property is absolutely booming at the moment, and that's not just for, that's prices that we're talking about. And that's not just Melbourne, that's around the country. But I want to, before we go to what those prices are at the moment, I want to go back to May 2020. Have a look at this headline. CBA warns Australia risks 32% house price crash in a prolonged downturn, flags $1.5 billion coronavirus hit to bank. Now, that is a pretty bleak picture. Fast forward less than 12 months later, and have a look at the absolute bout turn. Booming property prices push household wealth to record levels in Australia. It is amazing how much of an impact 12 months has had.
It is amazing, and I've got to say, I was on that train. I had the fear that the house prices were going to collapse. I know I've had conversations with numerous clients. They were sitting on hold, waiting for house prices to drop so that they could get on the investment train.
And for those already involved in property, there were probably a few lucky stories because it wasn't exactly easy to sell your house during the middle of a pandemic. And I'm sure there would have been some people out there that wanted to flip the house, get rid of it, but they weren't legally able to do it with the restrictions that were in place. The
restrictions on auctions, the number of people within a house did make it difficult. And for those that did force the sale and do the hard yards, they'd be kicking themselves now because if they just hung on a little bit longer until this time, and a lot of people did sell back then because of that fear that house prices would drop. They wanted to get out before it happened.
Roy, we're going to talk about what it means for people, for investors, and also for potentially, residential owners and first home buyers in particular. But before we do, let's have a quick look at some of the key stats that have come out of CoreLogic. Melbourne's median house prices hit $1 million. House prices up 8.8% for the March quarter. That's not year on year, Roy. That's the March quarter alone. The clearance rate across the country is up above 80%, which is quite extraordinary. And more extraordinarily is the fact that if you look at that last sentence there, while also being the busiest week for auctions, so the volume of auctions has increased, but the clearance rate has also gone up. So there's more houses being sold at auction more frequently.
And an 8.8%, we would be happy with that if it was an annual figure. That's a quarterly increase. That's an amazing figure for just one quarter. So wonderful for those people that have got investment properties.
Wonderful for those people that have got investment properties. Not so good for those that want to join the market. Do you think this is a deterrent for people to join the market now, whether that's as an investor or potentially as a first home buyer?
We often get asked, when is the best time to invest in the property market? And we always say now. Now, I know we've had a big increase, and if you're sitting on the fence saying, I'll wait for it to decrease, the property market is not like the share market. If we have a drop in the property market, it might be 3 or 4, maybe 5%, but it's not going to be 25%. It's not going to be 8% in a quarter. So I would be getting into the property market, but try and buy wisely. Don't necessarily buy at an auction where you've got 50 people and 50 people bidding for one property. So try and buy wisely.
Across the ditch, the New Zealand government have introduced legislation to try and push property prices down. They see it as a big issue there. Is that a risk, Roy, that the federal government here in Australia might do something similar? Or do you think that every indication at the moment is that it's play on as per?
I think at the moment it's play on as per, because the Reserve Bank, which we'll talk about shortly, have said that they're going to maintain interest rates at the current level. I'm not quite sure what legislation the government could or should introduce, because it's a free market. I don't know how much government intervention we want to have. It's based on supply and demand, and I think it needs to be left alone.
Well, we'll ask the Treasurer, Josh Frydenberg, on episode 4 of J Sanderson TV next month, Roy. Before we move on from this topic to the Reserve Bank of Australia, I want to talk about other options for investors, share prices as well at record levels, and let's have a look at the share price accumulation indices. Just to give you a long look at this this index that started, in the early 1990s, you can see that it's got a continual upwards trend. But the thing that I found interesting there, Roy, was that the actual downturn from the coronavirus and the COVID-19 situation is not actually that noticeable on that graph. You can see the 2008 financial crisis, very noticeable, but the V-shaped recovery from the COVID-19 pandemic has been quite extraordinary.
Isn't that interesting? We have a wealth management team that give advice on the stock market regularly, and they were saying consistently throughout COVID, do not sell, ride this out. And that advice was very good. It was those that panicked and sold, they're the ones that have sold when it was dropping, and here we have recovered back above the worst case or the best case prior to COVID. So it's always hold, don't sell.
And play the long game by the looks of it. You see, for anyone who invested in 1996, there you can see on that graph you would have ridden waves up and down, but on the whole you're riding a massive upwards trend. Right, let's get to the Reserve Bank of Australia. They met recently, the board, no change from them. Here's a statement from what the Governor had to say. At its meeting, the board decided to maintain the current policy settings, including the target of 10 basis points, so a cash rate of 0.1%. And you can also see there, it says the rollout of vaccines is supporting the recovery, but the recovery is uneven. Roy, there's still, so there's sort of, I suppose they're sort of sitting on the fence there. They're saying that things are looking up, but don't dismiss the potential for other problems as we continue to roll out the vaccine across the world.
Yeah, I think the Reserve Bank are reaching their targets based on inflation and GDP, and they do want unemployment to come down. I don't know how, it's got a fair way to come down, I suppose. But it's interesting that they have given us certainty on interest rates going forward.
One of the things I think when you think about this is, or the competing stakeholders in this, there's probably two that come to mind very clearly. Businesses, who a low cash rate promotes growth and promotes investment, but then also potential homeowners. And what that is doing, obviously it's a low point of entry for them to borrow money to enter the house market, but what it's doing is it's creating incredible pressure on house prices. How does the Reserve Bank balance those two forces, wanting to stimulate the economy but also keep housing affordable for everyone? Yeah,
it's a difficult question, because what we have seen the Reserve Bank do is separate home loan lenders who are owner-occupier and investor. So an investor pays a slightly higher interest rate. They are obviously stimulating the economy and the house prices at the same time. We need to keep interest rates low for businesses, and I don't know if there's a way to separate the rates that business get offered and the rates that investors and homeowners get offered.
Which I suppose goes back to your earlier point. We do operate in a free market, but potentially, there is that side of things where there may be policy intervention from a government if things do get out of control. And we won't get into the politics of that, but certainly the Labor Party brought some very significant changes to the last election. They were unsuccessful in being elected to federal government, and who knows what they'll offer up at the next federal election.
So fiscal policy is very difficult, but if you've got one rate for investors, one rate for owner-occupiers, do you now have a third rate for businesses, which might be lower again?
Again, another question for Mr. Frydenberg on the next episode. Let's have a look at the Reserve Bank's cash target rate historically, because I think this graph really gives you a strong indication of where we're at. We're at rock bottom. We can't get much lower than that before going into negative rates, and that's a topic for another time, Roy. But I think there's a clear message here if you're going to borrow money, isn't there?
There is.
Fixed or variable?
Yes, we'll have a slide on that in just a moment, but let me tell you this. the Reserve Bank have stated they will not change interest rates until 2024. That's a will end up being nearly 4-year period. If you looked at that graph, there's not one 4-year period where we had flat interest rates. So it is interesting that the Reserve Bank have said, this is our interest rates, this is our policy, and we're not going to change them until 2024.
You are continually fielding questions from people regarding borrowing money, and you had one come in just this morning.
I worked on it this morning before we, sometime today, and I have an example here of a client with a home loan of $700,000 with a CBA. And if the client was to go from variable to fixed, they actually have a saving, a considerable saving, over that life of that loan, being the 4 years.
And here we go, there's the numbers there, 700,000, as you say, current rate is 3.35, fixed is 2.19 over 4-year fixed term. Those savings are pretty astronomical, aren't they?
They are, and we looked at this from the view, do we consider a refinance? Now, because of COVID, the business hasn't done greatly, so we don't really want to refinance with another lender. If we did, not only would he be getting somewhere close to 2.19% with somebody else, not necessarily CBA, but he'd also get a payout, a refinance payout to him of between $2,000 and $4,000 that some banks are offering. This is why you should talk to a broker, because these are not well known.
And as you say, this whole approach is underpinned by the safety net that exists from what the Reserve Bank said, doesn't it?
Exactly. This is a very unique circumstance that I've not seen in my working career before, where fixed rates are lower than variable rates, and that's all because the Reserve Bank had said, we're not reviewing until 2024.
And this is a question without notice, Roy, but on that topic, what type of magnitude of event would we need for the Reserve Bank to sort of backflip on that? Do you think we'd need some sort of disaster similar to the pandemic for them to change their word, or historically have they kept to their word?
Historically, they actually have kept to their word, and it would be the opposite of a pandemic. It would be that the economy is too good. It would be unemployment drops to record lows, labour shortages, which is impacting on other things. So I don't know whether the Reserve Bank would go back on their word. I think they're more likely to try and split up the rates between business, owner-occupier and investor.
Well, we mentioned off the top that consumer confidence is soaring, and we love to have a look at the consumer confidence graph on J Sanderson TV. And Roy, have a look at that. That is quite extraordinary. It is up 6.2% month over month, its highest reading since August 2010. The index is at 118.8, up from 111.8 last month. Everything is flying at the moment.
Consumer confidence is a big thing. It means we're spending money. It means we're feeling good about ourselves, and not just our household, but our business. Can it get any higher, Dave?
Well, it's an interesting point. There's still external factors that are a little bit, skew-if from the pandemic, and obviously you look overseas, there's still massive problems overseas. So, potentially there's still upside in this consumer confidence index when things get even greater levels of stability. The vaccine rollout is not perfect, but once majority of people, once we achieve a herd immunity, potentially the consumer confidence index could continue to go up. It's interesting, as you say, what are some of those things that actually affect this index, that creates these increases in this index?
I think that there's a number of factors, but I can't imagine that 12 months ago, at the end of JobKeeper, that we would have any perception this was actually possible, because we were all predicting JobKeeper was going to finish, consumer confidence was going to dive, and house prices were going to dive. So it's quite the opposite of what we thought was going to happen. We ended up, you remember one of last year's slide, we wanted the Nike tick, and we got the Nike tick. We got what we asked for.
And you made a good point there around JobKeeper and also JobSeeker. Now JobKeeper has ended effective 31 of March, or effective end of March. So that consumer confidence number is coming from March. So we will, it will be interesting to see whether that does have an effect on the April number, which we'll find out on the next episode of J Sanderson TV.
Correct.
GDP growth is another measure that we like to have a look at on this program, and you can just see here, this is another long look at the graph. You can see there the massive downturn in GDP growth. But the point we wanted to make on this one, Roy, is Australia did have a prolonged period of GDP growth for a very, very long time. You can see that graph goes all the way back to the early 90s, and it's positive growth in all but 3 quarters up until the recession that we had last year.
Yeah, very interesting. If you look at the light blue slide, those lines, the graph, the light blue in the middle of the slide, they've always been between 0 and 2, or nearly always between 0 and 2. And we have just jumped up to about 3.2%, I think was the exact number. And that's quite an amazing turnaround.
The other thing that is interesting about this is that, one thing that we've talked about a lot on this show is demand and consumer confidence, but GDP growth actually also relies on a strong supply chain. And one of the things that's happening in America at the moment is that the Biden administration is doing some very thorough analysis of the supply chain. And we actually, and this is a sort of slightly off the tangent point, Roy, we actually saw some interesting things happen during the month with the supply chain. The Suez Canal, some people would have seen that, the giant ship blocked the shipping route, which caused chaos with oil prices going up and some other commodity prices going up. But we talk a lot about demand. Supply is also, inherently linked to how the rest of the world is going. So the vaccine rollout across the world is really important.
Supply, that's actually a very crucial point, because when I'm talking to builders, one of the issues is supply of timber. There is a shortage across the world, more so in Australia. And interestingly, there was a couple of ships that were caught up in the Suez Canal that were full of timber. That one of them particularly was coming to Australia. And right now, I've got a client who is purchasing timber, and they got an email to say at the end of March their timber prices were going up 12%. 12%. They then got a follow-up email 7 days later and said it's not 12%, it's 25%. So lack of supply, and that's just timber. I'm not talking about polystyrene and a number of other products that are also in the building industry that are low supply. That's going to have an effect on house prices, building prices. So it'll be interesting what does happen over the next 6 to 12 months.
And this is a term we don't mention on J Sanderson TV a lot, but do I say that inflation might be something we're talking about on J Sanderson TV in 2022? Because it's if we continue to see this massive upward spike, well, it's potentially
inflation would need to be followed by wage growth, because we've had very little wage growth for a decade. That's because we've been having lower taxes, has been compensating that. So I feel that inflation will be something that could be an issue, and we talked about what the Reserve Bank, what might force them to take some action. And that might be an issue if inflation went through the roof. You
talk about wage growth. Let's have a look at unemployment as well. Again, a historical sort of long lens to this, but you can see that it peaked during the start of the pandemic last year, and now back to a reasonably stable level. The Reserve Bank, though, did say in their statement, the governor did say that it's still too high.
Yes, and that's one of the reasons that they put in that media release. They want that down a little bit lower. Interesting though, it peaked at around 7.5%, but the reality is the CBA, many banks, I think including myself, were forecasting that would go over 10% unemployment, and that didn't happen.
So, Roy, you know a little bit about me. I work at SEN. I work in the TV department. Now, at the start of the pandemic, I dead set thought that I needed to learn how to drive a tractor, because I was that concerned about potential for unemployment. And as you say, we all got consumed by these massive headlines that we're going to see, 50% unemployment. We're going to see the whole country unemployed. Obviously, luckily and thankfully, and due to some very quick reactions from governments around the world with their stimulus packages, and the government back here in Australia, we never saw it get to a point that was even remotely as disturbing as the predictions made it potentially out to be. It's a really good news story that we probably haven't celebrated enough, that there is credit that needs to be given for the response that sees us in this situation that we're in now.
Yep, I think there are some industries that are still struggling. Tourism is one of them, although airline industry is another one. Tourism may be coming back because Australians have money to spend in Australia, and we're seeing that. I'm seeing clients being fully booked in Airbnbs where they were vacant for 6 months or so. And people now who go to the country Victoria, I've got a few clients with Airbnb, instead of getting a booking for 2 nights, they're getting a booking for 7 nights. So people are wanting to holiday within Australia, and I think that's necessary.
Strong consumer confidence, if you like. Hey, Roy, we've touched on this point before in the past, but we want to touch on it again because you just think this is one of the great options available for businesses, and it's the free mentoring grant that's being provided by the state government at the moment. Roy, why do you want to talk about this again?
Yep, the reason is because this is one of the best state government grants I believe they delivered. It's like, if a man is hungry, do you give him fish or do you teach him to fish? So this is like this. This grant allows the business to learn about how to run a business. You can be a great plumber or a great carpenter. It doesn't make you a good business person. It means that the mentor, and that'll be an accounting or a mentor firm that is accredited through VECI, and we are one of, I don't know how many, but certainly 20 or 30 around Victoria that you can select. So it's not from a biased point of view, it's actually from the point of view I'm doing some mentoring for businesses that I can see the benefit they're getting out of this is not just a short-term cash injection, it's actually a long-term how to run their business. And there's not one business client that's not coming out of this going, this has been fantastic. So that grant will expire soon. Get on board, go to that website that you just saw, and apply for it, because once the money is gone, the money's gone.
Yeah, make sure you jump on the VECI website for that. Roy, we've had a few viewer questions that have come through during the time between episodes that I want to ask you. The first one, is a massage tax deductible if I am injured at work?
Massage falls under the category of medical, so it is not tax deductible. But if you are injured at work, you should actually have fill out a work cover form or an incident report so that the employer will pay for that massage or any chiropractor or physio that you need, but make sure there's a report filled out. But it's not a tax deduction if you actually pay for it.
Next question, can I claim police checks or working with children checks if my employer requires them?
Good question. If it's your current employer, the answer is yes, because you're currently working, and they often need to be updated every 3 years. So the answer technically is yes, but the trap, if you are getting the check because you're about to go and get a job with another employer, you're between jobs, or they're not for your current employer, it's for a future employer, they're not tax deductible. So the timing of it is critical.
Interesting. And the third question that we've got, if my work make it mandatory to get a COVID vaccine, can I claim it as a tax deduction?
So if the boss makes you get a COVID-19 test, it's actually free. So maybe the question isn't, is it tax deductible? Maybe the question is, can the boss make the workers go and get a COVID-19 vaccination? Is it compulsory?
It's a good question, and one that is certainly right in the wheelhouse of Terrie Seymour from People and Culture Solutions. Terrie, welcome to J Sanderson TV.
A pleasure, Dave.
Terrie, Roy and I were just talking about employers and their ability to make COVID testing mandatory. Are they able to do this?
Well, the answer in simple terms is no, because nobody can really grab you and jab something and put it into your arm against your wishes. So that's the short answer. But however, it is a little bit more complicated than that. And that is that it does very much depend upon what industry you work in and what role you play within that industry. And maybe if I can give you a bit of an example in the aged care sector, where employers make it mandatory to meet the accreditation standards for funding for workers to have the flu injection. So I'll give you that example. So it becomes a condition of your employment. So the answer is very much dependent upon what industry you work in and what decisions have been made around risk issues. And obviously the aged care sector, for someone to come into work and bring the flu in to that workplace has devastating consequences for the aged care residents.
Terrie, as an employer in an office environment, I'm obliged to have a safe working environment for all my staff. I think that's right. As an employer, what can I do if I can't force them to have a COVID-19 vaccination? What should I do?
Okay, well, Roy, you would have developed a COVID safe plan, as would many of your clients, as was required in Victoria at least, to be able to continue to operate their businesses. So what you can do and what you're obliged to do is put in place those practices and policies and procedures that make it a safe workplace. So that's fundamental. That's all your obligations are. So you would look at the risk issues around your workplace, and if somebody wasn't prepared to have the COVID vaccination, once it becomes available to their particular age group, there may be some good reasons why they don't have it. For example, they may be pregnant and it's advised not to, or they may have some other health issues that are compromised. So you need to look at things like what we call is reasonable adjustment to ensure that you're not actually discriminating against them. So it may be that at all times they have to wear a mask. It may be that they have to sit in a different location. It may be that they need to work from home. It's something that you really do need to work through with each and every employee. And it would be something that if I was an employer like yourself, Roy, I'd be building upon my COVID safe plan to actually undertake the various risk assessments associated with your plan. And I think it's also really important, and in fact a requirement under the OH&S Act, to consult with your employees. And in particular, if you have elected health and safety reps, that's a must. But consult with your employees, talk to your employees, because my experience tells me that most employees are really good value, are really open to ideas and suggestions that sometimes us employers don't think about. And I think if you can find a mutually agreeable solution that provides protection for them, because you have an obligation to protect them as well as yourself and your business, and your clients and anyone who comes in contact with your business, you just work that through with that process. I would also make a suggestion to employers in working through those risk issues to actually make contact with your work cover insurer. I've found through working with some of my clients that the work cover insurers have really been very helpful in helping those employees to assess the risk. Because ultimately it's a risk that's borne by the employer if it's not a safe workplace.
I was having a conversation with a client very recently, and the issue came up about keeping a register of those that have had a vaccination and those that have had not. And the issue was that a vaccination is actually medical related, and we're really not permitted to ask that question. Or are we permitted, or does this need to be kept confidential? How does that work?
Yep, okay. Well, that's a really good question, Roy. Under the Occupational Health and Safety Act, employers are actually obliged to monitor the health and safety and the well-being of their employees. So insofar as it relates to medical information, it's about on a need-to-know basis. So if you, for example, had somebody whose portfolio was to be responsible for the OH&S management of your organisation, then they have the right to know, and as a business you have a right to know that, particularly if it's a policy requirement and part of your COVID safe plan for people to have the COVID vaccination, it's not a breach of their privacy just to record that they've had it. As we know in recent times, when people have had to go off and get a COVID test if they've had the various symptoms, then there's been a requirement to actually show the text message that you get back after having a COVID test. And so that's all it is. It's only that, yes, they have. It's really about capturing the evidence, and that's not a breach of privacy. But it should be treated in the same way that you would treat your HR records and payroll information. It's the person who's responsible for the recording of that information, and obviously the CEO or manager of that business to know that.
Terrie, much appreciate your assistance for that on those questions. People and Cultural Solutions, quickly, what do you do and how do we contact you?
Okay. Well, People and Culture Solutions is a boutique HR advice firm. We provide support to organisations, small and large, in the HR strategic space. So that can be anything from developing and negotiating enterprise bargain agreements, dealing with conflict between employees, workplace investigations, and all of those sorts of things. Organisational change, looking at structures, award advice, which award applies to me, and what are the current minimum pay rates that I'm obliged to pay. So it's a whole range of things. Anything that fits in the HR space, we do it, and we have a team of experienced consultants available to support businesses out there. So how to contact us is www.peopleculturesolutions.com, and they can also find us through RJS.
Terrie, it's a tricky time with plenty of moving pieces in the landscape. Thanks so much for joining us and explaining those pieces on J Sanderson TV.
Thank you.
Terrie Seymour there from J Sanderson TV. Some interesting insights, Roy. And as I said just there at the end, it's a landscape that's moving very dramatically as we introduce vaccines and new requirements for OH&S, etc. are all coming into play.
Spot on. Terrie and her team are very good at what they do. Highly recommend them for any business. That we can't be specialists at everything. We actually outsource our HR, and you need to use somebody like that if you're not sure. So very good resource.
Right. Now strap yourself in, because this is the part of the show that a lot of people come to watch specifically. It's Roy's Rage, and he's back for another week coming off the long run. Roy, what has got your back up this week?
Well, what has got my back up this week is when you buy a property interstate. So if you live in Victoria and you buy a property in, let's say, New South Wales, that means that the landlord is in Victoria and the tenant is in New South Wales. Now, if you have a problem with the tenant, normally what you would do is you go to VCAT, whether that's a rent increase, an eviction notice, a dispute, rent not being paid, you just go to VCAT. But the rules in Australia are that you actually have to have the tenant and the landlord in the one state to use the state body in Victoria called VCAT. The exception is South Australia, so I'll put that as a provider, as an overrider. But the fact that you cannot go to VCAT means the alternative, if you have a dispute with a tenant, is you must go to the Supreme Court. That's a costly outcome. And if you're trying to evict a tenant or get a rent increase or get rent paid, to take it to the Supreme Court will cost you not thousands, tens of thousands, and it makes it not possible. So what I believe needs to happen is the federal government need to step in and try and make some of the rules around property ownership and property regulations being Australia-wide rather than state-based, where we all have our own set of regulations.
It's been a bit of a tough run for the landlord, hasn't it, of late? There's been some very big changes in legislation there, and as you say, this is perhaps another topic that, or another way that the landlord is adversely affected. We
may do something next week on landlords and their responsibility, because as an owner of a property, an investment property, the changes in Victoria have been extensive and the costs have gone up. And we might discuss that at next episode.
Interesting to see also whether that has any change on property prices. At the moment, doesn't look like it. Roy, throughout 2020 and also into this first part of 2021, we've talked about innovation, we've talked about creativity, we've talked about businesses doing things differently. Well, Ashley Badcock from Hulson is someone with a unique idea, and Ashley joins us on J Sanderson TV. Ashley, welcome to J Sanderson TV.
Hi Dave, thanks for having me.
Tell us a little bit about Hulson and how the idea for the business came along.
Yeah, we've been trading as FrameLink, doing truss and frame prefabrication and carpentry now for a number of years. And there's, with the change in the market, particularly there's a timber shortage at the moment, and also an overwhelming appetite at a consumer level for transportable homes and outdoor offices, home offices, that type of thing. We took the opportunity to expand into that market. And we're able to use the same infrastructure that we have for FrameLink and to build these transportable pods is where we've come from. And we've taken that to market under the banner of Wholesome. And the uplift has been fantastic. And I guess we didn't realise how big the market opportunity was.
And just to give our viewers some context, we've pinched a few photos from your website under the inspiration page. So, as you sort of touched on there, you do some of these pods. Some of them are quite magnificent. We're not sure. I'm not 100% sure which ones are yours or which ones are other ones. But talk us through some of these.
Yeah, that's right. A lot of them are images that we've purchased because, as we mentioned, that we're brand new. And obviously that one there that we're looking at now is an artist impression. We've been building, I guess, structures similar to that and on a grander scale for, probably 30 years. So it's just under this Wholesome banner. We're still developing our own product range and product lines. So we've got our first couple coming off of the production line now. So essentially these are great examples and illustrations of what can be achieved with the factory-built product.
Ashley, whether they're pods, transportables, bungalows, whatever we might call them, how big can they get? How big do you make them?
Yeah, our standard pod size is 2.4 by 3.6, and then we work up from modules from there. So I guess the garden pod is our entry level. Which is the 3.6 by 2.4, and then really the sky's the limit, and we're happy to sit down and work with the clients on any combination that they take from there. Those sizes derive from the most efficient use of timber and materials, so it minimises the amount of cutting, and also what we can fit on a truck, because essentially we're building it in a factory, we're popping it on the back of a truck and delivering it to site.
Do you have a standard templates of your designs, or do I come in and pencil out what I want, or have you've got your templates?
Yeah, we've done a lot of research in regards to what the market wants. So we do have our standard templates and designs that were built from that. But having said that, though, we're totally customised, or we can customise anything that the client wants. So we can sit down, work through the client's needs, and develop something that is tailored to them. But will all basically work from the that modular or pod design and templates that we have.
Just on your clients, Ashley, tell us about what some of their needs are. What are some of their stories? Why do they come to you?
Yeah, I think there's a big trend, isn't it, for people working from home now, and that's been the primary driver for this product. Extending, people, I guess there's the classic 3-bedroom home where, so mum and dad have one and the kids have the other. There might be a study, but it needs to be more functional now. It just can't be a room off from the kitchen. So this provides people with the opportunity to be able to set up their own areas working from home, which seems to be the new trend. We're seeing it more and more.
What about, Ashley, with Airbnb? Because there's a lot of people right now who went through hell in COVID are now fully booked. Can Airbnbs go, I'll go and buy 3 of these pods and throw them on my land?
Yeah, wonderful opportunity, isn't it? And we work closely with some councils, and we are at the moment working very closely with some regional councils in regards to their specification and scope to be able to enable Airbnb opportunities to evolve rapidly or expand rapidly to be able to deal with that market. So, we can... if we can meet the needs of council with our design, we can build them in the factory and have them on site, and people move in within hours of them being delivered to site.
I don't want to flower anything here, Ashley. We at J Sanderson TV ask the hard questions. What sort of price do they start at?
Yeah, our garden pod starts at $17,000, and then I guess it works up from there depending on what the client is looking for.
And just on that, you mentioned that you need to build it to a spec that fits on the truck. What's the turnaround time, Ashley, in terms of you've got the house on the truck and you drop it off, and is it ready to go straight away, or how long does it usually take to implement?
Once we drop it off, Dave, you can put your slippers at the front door straight away.
It's an incredible concept, and as you say, Roy, there's a lot of people, and as you've mentioned, Ashley, that could benefit from this massively, particularly the work from home. I'm short an office. I'll just plonk one in the backyard. It's a great concept. And just before we finish up, what have you found any? What's the most interesting use of the hub that you've had, from your client inquiry so far?
Wow, it's early days, but probably one of the early inquiries that struck me the most was someone from New South Wales who said that they've spoken to people that wouldn't truck them interstate and also wouldn't customise what they're after. And that I was surprised by that, which that underpins not just our house and business ethic, but also FrameLink, is that we want to work with our clients on a solution. So that's our key focus. If people want one in New South Wales or South Australia, Victoria, we will work with them to do that, and you'll be surprised that it's not cost prohibitive to be able to service those markets. And of course, we'll customise any design. If you need a door in the middle or a door at the end, that's no problem at all.
Ashley, thanks so much for your time today. It's a very interesting idea. We look forward to hearing how it all progresses. Thanks for joining us on J Sanderson TV.
Thanks for having me.
Ashley Badcock there from Halson. Roy, it's been another great show. We've spoken to two great guests. We had a great conversation about the RBA and their role, and also the property prices boom at the moment. Signs are looking good for the Australian economy at the moment, and as the vaccine continues to roll out, we've sort of talked about the fact that potentially consumer confidence still continuing to soar.
It's going to be an interesting month, I think an interesting year, to be honest. So we'll continue with these episodes once a month. It's been great.
I think, and one thing to tease before next time, as we mentioned, JobKeeper finished at the end of March. We saw the consumer confidence index go up during that period of time, but we haven't seen what the numbers look like post JobKeeper, and there have been some industries that are still adversely affected. You mentioned tourism before, so something interesting to watch.
It is, and we'll be across it with whatever happens.
And something perhaps is not as interesting to watch as your Carlton Blues, my Bombers, but we'll persist, and we look forward to also welcoming Mr. Josh Frydenberg to J Sanderson TV next time. Thanks so much for joining us on the show. Looking forward to next time as always, and enjoy your night.